All right. Good morning, traders. Good morning, good evening, good afternoon, I should say, whatever time it is, wherever you're at. Welcome back to New York Live Trading Room. Hope you're having a great day. We got a bit of a slow day in the market this week, or today, I should say, to start things off. We talked about this yesterday, but just to review, there's a lot of fundamental news events coming out this week. We had the Australian interest rate hike kick things off yesterday. This afternoon, 2 p.m., we've got the FOMC statement. We've got an interest rate hike here in the US as well. Tomorrow, we've got an interest rate hike from the Bank of England. And then Friday, we have non-farms. We also have the sneaky kind of non-farms precursor today as well. So what you're seeing across the markets, all markets, not just I don't know what's happening in crypto. I don't really follow that, but all markets, as far as forex, as far as your stock markets are, is we're seeing basically everyone keeping their powder dry. When we say keep their powder dry, again, what it means is that no one is looking to make any decisions before the big decisions, right? It's just unwise. You can ask yourself the question, well, what about people trying to price in the move, meaning get involved in a move before, getting involved in a move in an expected direction before the move happens? Well, that happens days and weeks and months beforehand. It doesn't happen a couple hours beforehand, right? So when you see the release today and whatever it says about future interest rate hikes or bonds and stuff like that, the pricing in that is happening today is not actually based off of today's news. It will be based off of kind of the future news. So across the board, we've really got nothing. We've got, if you thought yesterday was dull, we've got basically the same thing. Or she said many inside bar days. Yep, many consolidation. So we're probably gonna have a really short session here because I don't want to keep you here for no reason. My philosophy is that if we're here, if we're having a good conversation. Yesterday we talked about different ways to use the RSI, right? Your non-traditional way to use the RSI, looking at zones and stuff like that. We've had conversations in the past about strategy development, trailing stops, active trade management. I have no problem having those and making this kind of like a Monday Q&A session. But I'm not just going to hold you here for hours just to look at a blank chart. So I've really got nothing on my radar for the trade of the day. I do have this on Aussie New Zealand. It's a good example of a double top, but I did want to shoot it to you guys. I know many times, especially you guys watching on YouTube or TradingView, you come in a little bit late. You say, Akil, can you check out this? And I shut you down because I say, hey, we're only supposed to look at one pair. That's the way I keep it fair for our premium members, or our tier 1 members, I should say. But today, as in the title, is going to be viewer's choice. So if you have a pair or anything that you want to take a look at in the market, let me know. I will look at it. I will analyze it. I will answer any questions that you have on it. That will be today's trade of the day. Then, as always, I'll boot you out, and then we'll continue our session in the live room. So I'll give you guys a few. I'll mute the mic for maybe about 30 seconds or so. I know there's a delay for you guys that are not in the live room. So shoot in if you have something you want to check out or a question that you want to ask, and then we'll get to it. If not, we'll just do Aussie New Zealand because something is always better than nothing. But I'll mute the mic for a little bit. I'm going to get a swig of my coffee, and I'll see you guys hopefully with an idea to check out. Do. Awkward silences. I don't think we're going to get anything, guys. But I did tell him I'd give him 30 seconds. RSI zones. It's always a fun conversation. Slow markets. Yeah. Again, hey, like I said, you got to think about it from your perspective, right? If you knew there was a high impact news event that was coming out, and you knew there was the potential for the market to go crazy in one direction or the other, right? You don't know what direction it's going to go in because you can't really anticipate the reaction. Would you want to have money at risk, or would you want to keep it in your pocket? I'd want to keep it in my pocket. Now, me a long time ago, when I hit on my first non-farm payroll and thought that I could master the market and be a millionaire just trading once a month, that was different me. That was my strategy at one point. It only lasted a month. I got lucky and just hit on the right direction of a non-farm 1 month, and then found out what non-farm was, and then had the brilliant idea, because you have this inflated sense of confidence. I'm like, yeah, I'm just going to travel the world. Once a month, I'll flip open the laptop, whoop, hit on the non-farms, close the laptop, whoop, travel the world for another month. And then I lost the next month, a massive amount, because of course I didn't use a stop loss back then. But that's back when non-farms were violent. Non-farms were moving like 200 pips at a time. It was a violent day of non-farms. Non-farms now are nothing. Nothing. You guys have no idea the power of non-farms. You think 50 pip moves are important? No. All right. Do you ever look at futures? I don't personally, no. I don't, but all charts you can read them the same way. I don't think I shared this with you guys yesterday. Maybe I did, about the trader who's trading options and something now, but all based off the ability to read a price chart. All right, so we'll just start here on the Aussie New Zealand. No one typed anything in, so we'll kind of get to going here. This is a good example of a double top. So let's go back to the daily and let's look at something on the daily. Let's go through our IPDE process. Again, I like to draw in my good friend, the horizontal line, and let's just see where price is trading at. And Orsi mentioned this earlier, inside day, right, Orsi? Now, inside day right at the top of this range. That's interesting, right? So horizontal line in, let's ask ourselves, look left, structure leaves clues, all right? So we have our most recent level of structure right here. We do have this sneaky level here we want to pay attention to. So I'm going to put a note here as well, because I always want to be aware of overlapping levels of structure. And I'm going to adjust this down to the high of this structure, right? Now, why am I adjusting this line down to the high of the structure? What is important about notating the high of this recent level of structure? What would you say? Sure, said, very, very cool that you bring up fundamentals. It seems a bit difficult for me to interpret, but I'm sure with time it all makes sense. Yeah, I'll tell you this with fundamentals. I didn't care about fundamentals at all for the longest time. I am team technical, but I was always team technical. Right? I was a firm believer that you don't need to know anything about fundamental analysis to trade, and honestly, you don't. Like, you don't need to know anything about fundamental analysis to be a trader. An investor, perhaps a different story, but a trader, you don't need to know anything about fundamental analysis. But I started learning about it for two reasons. One, because I was the dumb guy in conversations very early on in my trading career, right? So I'd speak to a lot of traders, and this is young Akil, and a lot of them would talk about all this. They have college educations and all this stuff. They studied economics and all the fun stuff that you see on TV, right? So I'd be in these conversations with traders, and I'm kind of homegrown, right? I'm just homegrown. I got no economic background. I kind of like self-taught or not self-taught, because I had a trading coach and a mentor, but I didn't go to school for this stuff. So I'm kind of like a different breed of trader. Kind of like just a different breed. So we'd have these conversations and they'd be talking all this fundamental stuff, and I had no idea what they're talking about. And I would just feel dumb in these conversations, and I couldn't put forth any input, right? I couldn't join it or understand. So I said, hey, I'm just going to learn like the basics of some of this stuff, just so I can understand what's happening, and maybe give like, oh yeah, this, maybe give a little bit of input to the conversations. And what I learned over time is that, it could be helpful in those home run trades. I benefited massively off of a few home run trades. We've spoken about that before. That's when technicals and the fundamentals line up in the same area, in the same direction, I should say. And it also helps you avoid situations, right? So again, I used to be like My mentor was a drill sergeant. So it was one of those things where it's like, we don't give a boop about fundamentals. Like, ignore them. They don't exist. Now, you got to understand that just because they may not be important in your trading doesn't mean they don't exist. They still exist. They just may not be useful in your trading. But like I mentioned before, I think it's crazy for you to trade 15 minutes before an FOMC statement or an interest rate hike, right? Because the market's going to be on the emotional roller coaster. Hey, Vincent, welcome. Good seeing you, man. The market's going to be on an emotional roller coaster. So it's just not it's not a good time to be in the market because it's your edge is going to be disrupted. So even understanding fundamentals enough to know which to avoid is helpful, right? That is that any different than the conversation we had yesterday about trade management, right? We spoke about different ways to improve your trading, right? You can increase your win percentage, decrease your losing percentage. You can increase your average win. You can decrease your average loss, right? If you can help decrease your average loss or increase your win percentage by avoiding kind of bad moments in the market, that is a win. That is a win. And the thing about fundamental analysis is this, and I don't know if you guys have ever heard, you guys are familiar with Anthony Chung from Amplify Trading? We brought him in for a workshop before, right? Why me and him are on the same page so much? First of all, he's a sports nerd too, right? So we both love sports, so automatically that's how we get down. But he's got the same philosophy as me. Is I don't think you need to go to university or school to learn about fundamental analysis and what's important and what's not. The way you can learn about what's important and what's not in the market, and that does change over time. Certain things are important, then they become not important, and then they become important again. Is just you just pay attention. Pay attention to what's happening in the market. Pay attention to how the market reacts to it. And the market will tell you what it cares about. Does that make sense? If you simply do those two things, the market will tell you what it cares about, right? I give you, and it's not about using these economic calendars. They are helpful, but understand that these things are lagging. And the best example I can give is again, every Thursday, we've got this boy coming out, right? Unemployment claims. Very early on in my trading career, when we were coming out of the recession and whatnot, right? Unemployment claims, this was a fire starter. Like clockwork, every Thursday at 8:30, the markets will go wild. Because the biggest thing that the markets cared about at the time was jobs. It was by far the main event. It was jobs. Unemployment is high, right? Then over time, as our economic situation changed, it shifted from being unemployment claims, because our unemployment rate was at a normal level, to now it was average hourly earnings. Well, we have jobs, but we don't have high paying jobs. And then eventually that got cleared up as our situation improved. And then unemployment claims became a non-factor, but it was still red for a certain period of time because it used to be a hot button issue. It's only recently that it's become yellow or orange again over the last couple of years, because no one cares about unemployment claims right now as much. Everything right now is about inflation. So things will shift from being very important to not important. And the best way to learn is just to keep track of it. And then you keep track of the smaller things, because here's how fundamental analysis works, right? To be very, and again, I am not an expert at all, just a dumb guy that learned. This is your major thing. And what do you think your major thing typically is? The biggest thing in the market. If you go to they probably have this on Baby Pips, right? Forex trading 101 or investing 101. What is the main thing that everything cares about? That everyone cares about, right? Interest rates. That is the main thing. Everything shifts between interest rates, right? High interest rates, low interest rates. In Forex, the comparison between interest rates of one to another, right? Interest rates is the main factor. That's why these events are always going to be, like today is always going to be red events, especially if there's an interest rate change, right? Monetary policy. So then it stems off from there. And you ask yourself the question, okay, well, what is affecting monetary policy? what are the next tier that's going to have an effect on how monetary policy changes? And then you can trickle down to, okay, what are the things that are going to affect the things that affect interest rates? Does that make sense? And it seems complicated as this web kind of forms. But if you pay attention, I mean, honestly, if you just read and do some research, you can understand. So if you come across something in the market where it's like, hey, we got core PPI coming out, and you see that the market goes crazy off of that 8:30 event, just do some research on core, like Google search. What is PPI? Then it will tell you what it is. And then once you see what it is, you'll realize, oh, well, that affects this, which is a major part of that, which ultimately affects this. So that's why the market cares about it. And then it really is just putting two and two together. So it's like cause and effect. We know what the big thing is. The next step is basically understanding what are the small things that are affecting this big thing. And it really is, honestly, if you pay attention to the market, I mean, this is something you can do every day. Sometimes you're going to get sporadic moves, but honestly, if you just do this, if you just take note of what's happening today. Okay, let's take this one, 8:15. So you take note, and you can do this in your post-market analysis, right? Jason and I did a good coffee break episode on post-market analysis. Even in your post-market analysis, if you do this, all right, what do we have today? All right, we had 8:15 non-farms, ADP non-farms, excuse me. Let's go look at a chart at 8:15. Did the market move? Did the market not move? What was the result of the non-farms? As expected, below, above. Or if you see something out of the norm, right? You see some type of out of the norm candle. And again, this is going to be more lower time frame than higher time frame. But let's say you see an outlier candle, an anomaly. And that anomaly comes at, 3 o'clock in the morning. You're like, 3 o'clock in the morning? Well, what happened at 3 o'clock in the morning? Spanish unemployment change, big number. Okay. And then you just start taking physical notes and or mental notes of kind of what's moving the market. So that's the first level of it. And Anthony Chung is the same way. He is a fundamental analyst, but he'll tell you as good as I am. Like the stuff that he learned in school is nothing compared to just his practical application. Basically just paying attention to the market and allowing the market to tell him what's important and what's not important. Excuse me. And then as you go through different phases, you learn even more. So as you go through your first recession, you learn stuff. As you go through your first pandemic, you learn stuff. As you go through your first war, you learn stuff. And then it repeats. One of the reasons, right, I had a monster year investing 2020 into 2021, right? Or that's where I set myself up for my monster year, right? And that's because all of the markets were down. All of the markets were down because of the pandemic. The reason I knew exactly what to do and the reason I had so much confidence in doing what I did was because when I first started trading, I traded through the recession here in the US, right? I started trading in 2007. So I sat through the 2009, 2010 stuff and I saw exactly what the market did and I saw exactly what the market did afterwards. And although this was a different reason, the markets were, the movement was exactly the same. And if you go back every 10 years on go through the S&P and just go back every 10 years, you're going to see something similar, right? Something's going to happen every 10 years and it'll cause this big dip, right? And then we'll see corrections, right? Let's look at this bad boy. But once you've been through it, you have the confidence to go through it again and again and again and again, right? You see your dips, your dips, your dips, your dips, right? Happens over and over again. So that's how I taught myself fundamental analysis. Again, I'm not an expert at all. I can't break down anything for you, but I know how it relates to my personal trading. And that's all I personally care about. At this point, I'm just selfish. How can I make myself more money? and help you guys make more money too, I suppose. I guess that's important. But my main job is to make myself more money. No offense. I hope your main job is the same. Um, but it's not as intimidating as you seem. So as it seems, you don't need to be a genius, because you guys know me. I am not a genius by any means. But I'm good at I'm good at puzzles. I'm good at putting two and two together, and looking at relationships, and that's typically what it takes. So pay attention to the FOMC statement today, or the interest rate today. But I would tell you this: don't just worry about the interest rate. Do some research, right? Read the articles and see what really happened. Because again, the market doesn't really care about what happens today. It's focused on what's going to happen months down the road. Because everyone knows there's going to be an interest rate hike today. So unless it's a surprise number to the high side or the low side, that doesn't really make a difference. We're looking at the other stuff. And you'll find out what that other stuff is when you read. So Bobby says, I like that with the Forex Factory calendar. They have info in the report. Oh, yeah, I didn't even notice that. Yeah, that's a good point, Bobby. I was reading your stuff late. But yeah, I use Forex Factory just because I'm ingrained. It doesn't matter which ones you use. I've used this for like a million years. So like the first thing I do is I type in F and it comes up. So, but yeah, you can actually click on the little box here and it'll give you some information on exactly what it is, right? The measures, the frequency, when it happens, some notes, right? That's a very, very good point, Bobby. Yeah, very good point. All right, so back to the question that I asked before I got off on the ranty rant. I was asked, why do we adjust that level of structure down to here? Because we want to see if we violated structure or if we just tested structure. So in this case, right, this yellow line is our previous level of structure. Has it been violated or has it just been tested? Yeah, that's a really good point, Bobby. Yeah, that's what I used to do as well. So I had no idea what any of that stuff meant. It was just letters. PPI, CPI, ISM, huh? What are all these three letter things? What do these things mean? I still don't know what half of them mean. I just know what they mean to me in the market, right? So this has tested and not violated. So we're still holding structure. So we get down to a lower time frame, and we have a textbook double top. This is one that I would use for a training lesson if I wanted to show you a perfect double top. If I was writing a book, I want to show you an example of a perfect double top, this would be it. Perfection. You have price action that rallies up into previous structure. There is one issue with it overall. We have price action that rallies up in the previous structure here. We retest or we retrace, and then we retest and hold for a nice double top. We're overbought on the first test, divergence on the second test, beautiful double top. Now, bigger picture, there's one issue here. What is that one issue? And again, you may or may not take this into account. This is going to depend on you as a trader. Yeah. The main issue is that on this time frame, we have a higher high, higher close. So this is where it's going to come down to your rules. Does this matter? Does a higher high, higher close on your trading time frame affect your trade? Or does the fact that we held or are holding on a higher time frame, does that trump what you see here? And that's going to be different for different people. If this is a good hold for you, you've got a nice double top. We know that stops need to go where? Or we don't know this, but usually, at least speaking to the tier 1 members, because we're typically on the same page, stops would need to go where? Above the highs, right? I like using an ATR. Got a pretty big ATR here. ATR is 30 on Aussie New Zealand. So we're looking at 110.62. That's going to put you at 110.92 if you're using one ATR. Not 110, Akil. What am I doing? I'm looking at a different chart at the same time. Sorry. Right. 110.92. Yeah, I'm not tripping. Here we go. 110.92 would be a single ATR stop. That would be right here. Give me some ideas for targets. And again, we're just using one ATR as an example. You can use 1.5, you can use 0.5, you can use 0.75, 2, whatever thing you want. George says 110 even, psychological number. Right here. Oliver says 109.80, a little bit lower right here. So we got one trader looking at this level of structure and the even handle number. Another trader looking at this level of structure as well. Keel, what do your rules say about a hold on the higher time frame, violation on the trading time frame? We would need a hold on the trading time frame. So I couldn't take this because it's a higher high, higher close. Couldn't take it as a double top. 26.18 would be an option. Would be the next option. Although in this case it'd be unlikely, which I'll tell you why in a little bit. But you had your double top. Your double top technically formed. Man, it didn't give you a good close. Good test, but not good close. Your double top technically formed right here. Sorry, that's the wrong direction. And now we want to measure out because we know that good trades don't come too often. We need a lot of things to line up, which is why you don't see a lot of frequency in trading. And ask yourself, do you have a risk reward that works? So if you're trading to 110 even, do you have a risk reward that works? Obviously, everyone's risk reward is different, but I'm assuming that everyone requires at least a 1-to-1. I probably shouldn't assume that, but again, usually that's the case whenever I'm talking to you guys about trading plan, right? Is this risk reward something that you like? Nope. Is this risk reward something that you like to the lower level? Sorry, I'll move this out the way. Better, still below 1-to-1. So probably not a trade you can take. And again, the reality of trading. You get one thing, you get two things, you're looking for your third things, and boom, doesn't match up. This is also a good lesson on why before you ever take a trade, right? So here's a mistake that younger me used to make. I would see this early in the morning, right? First thing when I wake up, crust still in the eyes. And I'd see the double top and I'd be like, oh my gosh, I got to take it. I got to take it because it's going to go. You guys ever been there? It's going to run without me. FOMO, right? Give me a yes if you've ever been in that situation where you see something and you're like, oh crap, I got to get it now before it goes. I got to get it now before it goes. Beautiful double top, RSI divergence, right? So I entered a trade. Whew. And then later I realized that, man, my risk reward sucks. This is not actually a good trade for me. And then, of course, we do one of two things, right? The thing that we should do, here we go, Trading View saying, yeah, what is the thing that we should do? Write this rule down if you guys are new. If you ever find yourself in a bad trade, and a bad trade is defined by one that does not meet 100% of your rules, you should exit immediately. Right? It's kind of like if you walk into a bar or any place with your girlfriend, your new, fresh girlfriend or boyfriend, and you see your crazy ex in there, exit immediately. Trust me. From personal experience, I have been there. I've got a crazy ex. Get out. It's going to get bad. This is not just a trading lesson. This is a life lesson. If you have a crazy ex, and you guys know if you have one, yeah, get out immediately. Same thing goes for a bad trade. Yeah, Ryan's like, oh yeah, you know. You guys know. It's only going to get bad. You just, you know what, I'm not feeling so good, man. Is your stomach hurting? It must have been something we ate. Or the excuse I would use now. You know what? I placed that trade and I forgot to put a stop loss on. I got to get home. Let's get home so I can put that stop loss on. Anything. Say anything to get out of the situation. Just get out. It's not going to end well. But that's the number one rule. Now, most traders won't do that. Most traders will see this. They'll either be running in the direction and be like, you know what? I'm up a little bit in profit, so I'm just going to wait it out and see what it does. Or if it's how it is right now, right? They're a little bit down. And of course, no one wants to exit when they're losing money. So they have the hopium, right? Snort a little line of the hopium. Let's see if this thing. I'll just wait till it gets back to break even, right? You'll tell yourself whatever to tell yourself to stay in the trade, and you realize you're in a bad trade. So get out right away. But I made this mistake before. So it's always important that we measure out entries, or we know entries, stops, and targets before we get in any trade. We need to know these things. Before we can establish our trade, we need entries, stops, and targets. Because when we have those three things, when we know those three things, we know our risk reward. And there should be a portion in your trading plan that says what your risk reward requirement is. So if you don't know what that risk reward is, you shouldn't be in a trade in the first place. Now, an alternative to getting involved in this, two alternatives. Some of you may have an alternative entry where you say if price action comes to a certain level, so if it comes to a point where it gives me a one-to-one risk reward, I can enter at market, or maybe you even put a limit order up there. I have issues with that, but we won't get into that right now. Or you can look for an alternative entry like a 2618, where price action, sorry for the line, I'm going to delete all these things. 2618 would be a situation where price action violates the lows here. This is also a trading opportunity, trading the breakout here as well. Retraces, and then looking for that next opportunity down. So in the dry market, I think we got a good trading lesson in, which is my goal every day. Any questions about this before I boot you out? Trading viewers, YouTubers, hit that like button. You haven't been doing it enough. You have not been doing it enough. I'm getting angry. I'm getting upset. I can see exactly how many people are watching. There should be a 1-to-1 ratio between viewers. People just laugh as soon as I said that. Viewers and likes. Go ahead, leave. I don't need you. I don't need you. Please come back. Please come back. It's all about the views. It's all about the views. But I'll see you guys tomorrow. Be safe out there today. Again, 2 o'clock. We got some interest rate decisions happening. We got more tomorrow as well and the next day. So it's a busy week. But thank you guys for joining. As always, if you're coming in late and you're not live, you have any questions, type it in below. I'll read through them. I'll get an answer to you. Oh, they're back. The viewers are back. But until next time.